If you earn $1 million in many parts of the world, the government immediately becomes your silent business partner. Before you spend your first paycheck, before you invest your first profit, before you even celebrate your success, a portion of that money already belongs to the state. For billions of people, income tax is simply a fact of life. It pays for roads, schools, hospitals, police, and countless public services that keep a country running. Most people have never questioned the system because they have never experienced anything different. Now imagine arriving in a city where that familiar rule suddenly disappears. You negotiate your salary. Every dollar you earn is yours to keep. There is no deduction from your monthly paycheck for personal income tax. Entrepreneurs build companies without worrying that a growing income will automatically push them into higher tax brackets. Investors from around the world relocate, not because of beautiful beaches or pleasant weather alone, but because one of the biggest expenses in their financial lives simply doesn't exist. At first, it sounds almost impossible. How can one of the world's most luxurious cities afford skyscrapers that scrape the clouds, airports that connect continents, highways that seem permanently new, world-class healthcare, modern infrastructure, and ambitious projects worth hundreds of billions of dollars if it doesn't collect personal income tax from the people living there? The answer is far more fascinating than most people imagine. Dubai did not become wealthy because it abolished income tax. In many ways, it never needed one in the first place. To understand why, we have to travel back to a time when the city that now dazzles millions of visitors every year looked nothing like the global metropolis we know today. Long before the towering skyline, before luxury hotels rose from the coastline, before artificial islands stretched into the Persian Gulf, Dubai was a small settlement surviving in one of the harshest environments on Earth. Endless desert surrounded a modest community built around a natural creek that provided one priceless advantage: access to trade. Life here was never easy. The scorching climate limited agriculture. Fresh water was scarce. The surrounding desert offered little that resembled the fertile landscapes on which great civilizations usually flourished. Yet the people who settled here understood something that would shape Dubai's future for centuries. Geography can create obstacles, but it can also create opportunities. Sitting between Asia, Africa, and Europe, Dubai occupied a position that merchants could not ignore. Ships traveling across the Indian Ocean and the Arabian Gulf found its harbor a convenient stop between larger trading routes. Long before airplanes connected continents in hours, merchants carrying spices, textiles, pearls, dates, and precious goods crossed these waters, turning small coastal settlements into gateways between civilizations. Trade slowly became Dubai's first real natural resource. Unlike oil, trade could grow without being extracted from the ground. Every merchant who chose Dubai over another port strengthened the local economy. Every successful voyage attracted more traders. Every exchange built relationships that extended far beyond the Arabian Peninsula. Then came pearls. For generations, the warm waters of the Gulf produced some of the finest natural pearls in the world. Before cultured pearls transformed the industry, these treasures were among the most valuable luxury goods on Earth. Entire communities depended on dangerous diving expeditions that pushed men to their physical limits. With little more than simple equipment and extraordinary courage, divers plunged repeatedly into deep waters, gambling their lives for oysters that might contain a pearl valuable enough to support an entire family. For a time, the pearl trade made Dubai surprisingly prosperous. But prosperity built on a single industry is often fragile. In the early 20th century, two events arrived almost simultaneously. The global economic depression reduced demand for luxury goods, while Japanese innovators perfected cultured pearls, making beautiful pearls dramatically cheaper and easier to produce. Almost overnight, an industry that had sustained generations began collapsing. For many places, such a disaster would have marked the beginning of a long decline. For Dubai, it became the first great lesson in economic survival. Its leaders realized something that would define every major decision in the decades ahead. A city that depends on only one source of wealth is always vulnerable. The only lasting security comes from diversification. That lesson would prove invaluable when another discovery beneath the desert changed Dubai's destiny forever. But unlike many countries blessed with natural resources, Dubai's leaders made a decision that few expected, one that would eventually explain why millions of people today can earn a living there without ever paying personal income tax. Beneath the barren desert and the shallow waters of the Gulf, geologists eventually confirmed what many governments around the region had been hoping for. Oil existed beneath Dubai's soil. When commercial production began in the late 1960s, it arrived at a moment when the modern world was becoming increasingly dependent on petroleum. For many nations, such a discovery would have been the beginning of an economy built almost entirely around oil exports. Dubai's rulers certainly recognized the opportunity, but they also recognized its limits. Compared with neighboring Emirates, especially Abu Dhabi, Dubai's oil reserves were relatively modest. Even at their peak, they were never large enough to guarantee prosperity for generations. The leadership understood a reality that many resource-rich countries ignored. Oil would not last forever, and building an economy that depended entirely on it would eventually create more problems than solutions. That realization became one of the most important turning points in Dubai's history. Rather than treating oil as a permanent source of wealth, Dubai treated it as startup capital. The revenue pouring into government coffers was not simply spent on luxury or short-term popularity. It was invested. Roads connected previously isolated areas. Modern ports expanded the city's trading capacity. Airports were upgraded with the expectation that aviation, not oil, would become one of Dubai's greatest assets. Electricity reached growing neighborhoods. Reliable water systems transformed places that had once depended on scarce natural sources. Every major project was designed with a single question in mind: how can this generate even greater wealth after the oil begins to decline? This approach separated Dubai from many countries that experienced what economists call the resource curse. Around the world, nations blessed with enormous natural resources often become overly dependent on them. Governments collect easy revenue, innovation slows, private industries struggle to compete, and entire economies rise and fall with global commodity prices. Dubai tried to avoid that trap before it fully emerged. Its leaders were effectively betting that geography, business, logistics, tourism, finance, and entrepreneurship would one day become more valuable than the oil itself. History proved that bet remarkably successful. One project after another began changing how the world viewed the city. Port Rashid expanded maritime trade, and later Jebel Ali Port grew into one of the largest and busiest man-made ports on Earth. What looked like an enormous construction project was actually something much bigger. It was an invitation to global commerce. Shipping companies suddenly had access to one of the most strategically located logistics hubs in the world, linking factories in Asia with consumers in Europe, Africa, and the Middle East. The same thinking shaped Dubai's aviation strategy. Instead of seeing the city as a destination alone, planners imagined it as the world's crossroads. Fly between London and Sydney, New York and Mumbai, or Frankfurt and Johannesburg often made Dubai a natural stopping point. As international travel exploded, Dubai transformed itself into one of the busiest aviation hubs on the planet. Millions of passengers who had never intended to visit the city suddenly found themselves walking through its airports, staying in its hotels, shopping in its malls, and contributing to its economy. Every arriving traveler represented something more valuable than tourism. They represented economic activity. Hotels hired workers. Restaurants served customers. Retail stores sold luxury goods. Transportation companies expanded. Property developers built new neighborhoods. International conferences brought executives from around the world. Each industry strengthened the next, creating a cycle where growth generated even more growth. This was no accident. It was a result of a deliberate strategy to make Dubai indispensable to global business. But attracting companies from every continent required more than impressive infrastructure. Investors needed confidence. Entrepreneurs needed incentives. Multinational corporations needed reasons to establish regional headquarters instead of choosing Singapore, Hong Kong, London, or other global business centers competing for the same opportunities. Dubai's answer was surprisingly simple. Instead of asking, how can we collect more taxes? The city began asking, how can we attract more people who create wealth? That single shift in thinking changed everything. Rather than maximizing tax revenue from individuals, Dubai focused on maximizing economic activity itself. If businesses expanded, people spent money, tourists arrived, investors built projects, and companies chose Dubai over competing cities, the entire economy would grow. Government revenue could come from many different channels without relying heavily on personal income taxes. It was an unconventional model, and many observers initially doubted whether it could survive in the long term. Yet year after year, more entrepreneurs arrived. More multinational companies opened offices. More skilled professionals relocated with their families. The skyline climbed higher, the ports grew busier, and the airports welcomed record numbers of passengers. The absence of personal income tax was no longer just a financial advantage. It had become one of Dubai's most powerful advertisements to the world. The tax-free salary quickly became a headline, but it was never the entire story. If two cities offer the same business opportunities, the same quality of life, and the same level of safety, most people would naturally choose the one where they keep more of what they earn. Dubai understood this simple principle long before many of its competitors did. The city wasn't trying to become the cheapest place to live. In fact, for many residents, it is anything but cheap. Instead, it wanted to become the place where talent from every corner of the world felt it had the greatest opportunity to build wealth. That strategy reshaped the city's population. Today, the vast majority of people living in Dubai were born somewhere else. Engineers from India, bankers from Britain, entrepreneurs from Lebanon, software developers from Pakistan, architects from Italy, chefs from France, marketers from the United States, and professionals from dozens of other nations all arrived for the same reason. They believed Dubai offered something increasingly rare in the modern economy: the chance to accelerate their financial future. For a software engineer earning the equivalent of $100,000 a year, keeping that entire salary instead of losing a significant portion to personal income tax can dramatically change long-term wealth. Over 10 or 20 years, the difference can amount to hundreds of thousands of dollars. For business owners, investors, and highly skilled professionals, those numbers become even more significant. But there is a common misconception. Many people hear the phrase "no income tax" and assume life in Dubai must therefore be inexpensive. The reality is almost the opposite. Housing in prime areas can rival or exceed prices in cities like London, New York, or Singapore. International schools often charge substantial tuition fees. Healthcare, while excellent, frequently depends on private insurance. Dining, entertainment, and luxury lifestyles can become extraordinarily expensive. The money that residents save in income tax is often balanced by the premium cost of living, especially for those seeking an upscale lifestyle. This is where Dubai's economic model becomes more interesting. Instead of collecting large amounts of revenue directly from personal income taxes, the government generates income through many other channels. Companies pay licensing and registration fees. Businesses operating in certain sectors are subject to corporate taxation under modern regulations. Property transactions generate significant revenue. Tourism contributes billions through hotels, attractions, airline travel, and visitor spending. Customs duties, government service fees, visa charges, and various administrative payments all create steady streams of income. Think of it less like one large river feeding the government and more like hundreds of smaller rivers flowing together. Each stream may appear modest on its own, but together they support one of the most ambitious development programs in the world. Dubai also pioneered another idea that fundamentally changed how international companies viewed the region: free zones. These are specially designated business districts created with one purpose in mind: to remove as many barriers as possible for global companies. In many of these zones, foreign entrepreneurs were allowed to fully own their businesses, a significant advantage at a time when many countries still impose strict ownership restrictions. Licensing processes were simplified. Modern infrastructure was built specifically for international commerce. Industries with similar expertise were grouped together, allowing companies to benefit from proximity, shared services, and specialized talent. One free zone focused on finance. Another specialized in media. Others became hubs for healthcare, logistics, technology, manufacturing, education, or e-commerce. The result was something economists call a clustering effect. When businesses from the same industry operate close to one another, they naturally attract suppliers, investors, skilled workers, consultants, and new startups. Innovation accelerates. Costs decrease. Opportunities multiply. Silicon Valley became famous for this phenomenon in technology. Dubai intentionally recreated the same principle across multiple industries. By doing so, it transformed itself from a city that welcomed businesses into a city specifically engineered for business. None of this happened overnight. It required decades of planning, massive infrastructure investments, legal reforms, and a willingness to adapt whenever global markets changed. Every successful project created confidence. That confidence attracted more investors. More investment financed even larger projects. The cycle reinforced itself year after year. Yet beneath the glittering skyline lies a question that economists continue to debate. Can a city built on continuous growth maintain its momentum forever? As the global economy evolves, competition is becoming more intense than ever. Other nations have begun introducing attractive tax policies, investing in technology, and competing aggressively for international talent. At the same time, the world itself is changing in ways that could challenge even Dubai's remarkable economic model. There is another reason the phrase, "Dubai has no income tax," can be misleading. It suggests that the government simply chose to collect less money than everyone else. In reality, Dubai collects money differently. Walk into a luxury hotel, register a new business, renew a residence visa, buy property, import goods, or use many government services, and you will quickly discover that the economy is built on a network of fees, charges, and consumption-based revenue rather than heavy taxation on personal salaries. Since 2018, the United Arab Emirates has also applied a value-added tax on most goods and services, meaning people contribute to public revenue when they spend money rather than when they earn it. In other words, Dubai did not eliminate the need for government income. It redesigned where that income comes from. This distinction matters because it reveals a philosophy that differs from many traditional tax systems. Instead of placing the largest burden on personal earnings, Dubai encourages people to generate wealth, invest, hire employees, and expand businesses. The government benefits as economic activity increases across the entire system. The same principle explains why modern corporate taxation arrived without destroying Dubai's appeal. For decades, many international companies enjoyed exceptionally favorable tax conditions, but the global economy was changing. Governments around the world became increasingly concerned that multinational corporations were shifting profits into low-tax jurisdictions. International organizations pushed for a more coordinated approach, making it harder for countries to compete solely by offering extremely low corporate taxes. Ignoring those changes could have isolated Dubai from a global financial system. Instead, the United Arab Emirates adapted. A federal corporate tax was introduced for many businesses above certain profit thresholds, aligning the country more closely with evolving international standards while remaining highly competitive compared with many developed economies. For most employees, however, personal income tax remained absent, preserving one of Dubai's strongest attractions for global talent. This ability to adapt may be one of Dubai's greatest strengths. The city has repeatedly shown that it is willing to change policies when the world changes. It rarely treats success as a reason to stop evolving. Instead, every achievement becomes a starting point for the next ambition. That mindset can be seen almost everywhere. The skyline continues to change. New ports expand trade capacity. Artificial intelligence initiatives aim to transform public services. Renewable energy projects seek to prepare for a future beyond fossil fuels. Financial technology companies are reshaping banking. Digital assets, advanced logistics, aerospace, healthcare, and high-value manufacturing are becoming increasingly important pieces of the economy. Each new industry serves the same long-term objective: reduce dependence on any single source of wealth. It is the same lesson Dubai learned when the pearl industry collapsed more than a century ago. It is the same lesson reinforced by the limited size of its oil reserves, and it remains the guiding principle behind many of its biggest decisions today. Yet no economic model is without risks. Dubai's success depends heavily on remaining attractive to investors, businesses, tourists, and skilled professionals. A prolonged global recession can reduce international travel. Geopolitical tensions can affect trade. Changes in migration patterns can influence labor markets. Rising competition from cities determined to become the next global business hub could challenge Dubai's position. Cities such as Singapore continue to strengthen their role in finance and technology. Saudi Arabia is investing hundreds of billions of dollars into ambitious projects designed to attract international companies and talent. Other nations are simplifying regulations, improving infrastructure, and competing for exactly the same entrepreneurs, engineers, scientists, and investors that Dubai hopes to attract. The race has become global. In that race, tax policy is only one advantage among many. Safety, political stability, efficient government services, reliable infrastructure, international connectivity, quality healthcare, education, legal certainty, and ease of doing business have become equally important. Dubai understands that keeping salaries free from personal income tax may attract attention, but building an entire ecosystem where businesses can thrive is what convinces people to stay. Perhaps that is the biggest misconception surrounding Dubai. People often assume the city's success can be explained with a single sentence: there is no income tax. But cities do not become global economic powerhouses because of one policy. They succeed because countless decisions reinforce one another over decades. Dubai invested oil revenues instead of depending on them. It transformed geography into opportunity. It embraced international trade when others looked inward. It welcomed talent from around the world. It diversified before necessity forced it to. And it continued adapting even after becoming one of the world's fastest growing cities. The absence of personal income tax is not the foundation of Dubai's success. It is one carefully designed piece of a much larger economic strategy. Perhaps the most remarkable lesson is not that Dubai found a way to avoid taxing personal income. It is that its leaders asked a different question from the beginning. Instead of asking, how do we collect more from the wealth people create? They asked, how do we create a place where more wealth is created in the first place? That subtle shift in thinking transformed a modest trading settlement on the edge of the desert into one of the most recognizable cities on Earth. And as the world enters an era shaped by artificial intelligence, renewable energy, shifting trade routes, and intense competition for global talent, the real test of Dubai's model has only just begun. The skyline may continue to rise, new industries may replace old ones, and policies may evolve with changing times. But the idea that built modern Dubai, investing in tomorrow before today's advantages disappear, may prove to be its most valuable resource of all. It is a resource that cannot be drilled, mined, or imported. It exists only in vision, adaptability, and the willingness to think decade ahead, long before the rest of the world realizes the future has already begun.